Welcome to Money Depth Insights. I am the finance guide, John Array. Today we are talking about something almost everyone uses, but very few truly understand. Credit cards. Some people believe credit cards are dangerous. Some think they are magical tools for building wealth. Others use them daily without knowing what is actually happening in the background. The truth is simple. Credit cards are not good or bad by themselves. They are systems. And systems reward behavior, not intention. If you understand how credit cards really work, they can quietly strengthen your financial life. If you misunderstand them, they slowly damage your financial future without warning. This session is designed to remove confusion completely. No tricks, no shortcuts, only reality. To make everything clear and easy to follow, I have divided this topic into multiple deep parts. Each part builds understanding step by step. Let us begin from the foundation. Part 1. What a credit card actually is. A credit card is not free money. It is a short-term loan with conditions. When you swipe a credit card, the bank is paying on your behalf. You are promising to pay that money back later. That promise is the entire system. Banks do not make money because you use a credit card. They make money based on how you behave after using it. The credit card system is designed to answer one question. Can this person be trusted with borrowed money? Every swipe, every payment, every delay, all of it feeds into that answer. Credit cards are not designed to help or hurt you emotionally. They are designed to measure consistency and discipline. Part 2. Why credit cards feel easy but are not. Credit cards feel easy because they remove friction. You do not feel money leaving your hand. You do not count cash. You do not pause as long. This psychological distance is powerful. When spending feels painless, people spend more. Not because they are irresponsible, but because the brain reacts differently. This is why credit cards require discipline. Not intelligence. Not income. Discipline. The card does exactly what it is programmed to do. It records behavior. Part 3. The invisible rule that controls everything. There is one invisible rule in the credit card world. Pay on time. Nothing matters more than this. Payment history is the strongest signal in the entire credit system. One late payment can stay on your record for years, not because the system is cruel, but because reliability matters more than perfection. On time, payments show stability. Late payments show uncertainty. The system does not care why you were late. It only records that you were late. This is why automation and reminders are powerful tools. Part 4. Credit limits and what they really mean. A credit limit is not a spending goal. It is a trust boundary. The bank is saying, this is the maximum exposure we are comfortable with. Using all of it sends one message. You depend heavily on borrowed money. Using a small portion sends another message. You are controlled and stable. The system prefers restraint over usage. Part 5. Credit utilization explained simply. Credit utilization means how much of your available credit you use. If your limit is high and your balance is low, that is a positive signal. If your limit is high and your balance is high, that is a warning signal. The system interprets high utilization as financial pressure, even if you pay on time. This is why people with good income sometimes struggle with credit scores. They use too much of what they are allowed. Part 6. Why paying the minimum is a trap. Minimum payments are not kindness. They are survival payments. Paying the minimum keeps the account alive. It does not reduce real debt quickly. Interest grows silently. Balances stay heavy. The system allows minimum payments, but it rewards full payments. Paying in full builds trust faster. Part 7. Interest and why it exists. Interest is not punishment. It is pricing for risk and time. When you carry a balance, the bank charges for lending longer. Paying interest does not improve your credit score. It improves the bank's revenue. This is one of the most misunderstood ideas. Part 8. Why closing cards can hurt many people. Close cards to feel responsible. Sometimes this backfires. Closing cards reduces available credit. This increases utilization automatically. Older cards also show long-term behavior. Time builds trust. Removing history can remove trust signals. Part 9. Credit cards and identity. Credit cards shape habits. They reveal behavior patterns. Do you pay calmly or react under pressure? Do you plan or improvise? Credit cards magnify who you already are financially. They do not change behavior. They expose it. Part 10. The emotional side of credit. Credit card stress does not come from numbers. It comes from avoidance. People avoid statements, avoid balances, avoid reality. Clarity removes stress. Looking at numbers does not create problems. Ignoring them does. Part 11. Why some people master credit easily. They treat credit like a tool. They use it deliberately. They monitor it regularly. They correct mistakes early. They do not chase rewards blindly. They do not swipe emotionally. They use credit with intention. Part 12. Rewards and why they can distract. Rewards are marketing. They encourage usage. If rewards change behavior negatively, they cost more than they give. Rewards should follow spending, not drive it. Discipline first. Benefits second. Part 13. Credit scores are mirrors. Credit scores reflect habits. They do not measure worth. They measure consistency. Improving a score is boring, but predictable. On-time payments. Low balances. Patience. Part 14. Fixing credit is a process. There are no shortcuts. Disputes do not replace behavior. Tricks fade. Consistency builds trust slowly. The system rewards patience more than intelligence. Part 15. Long-term credit mindset. Credit is not about approval. It is about reliability. When you stop trying to beat the system starts trusting you. Final message. Credit cards are silent teachers. They reward calm behavior. They punish emotional reactions. If you control your behavior, credit cards become powerful allies. If this explanation gave you clarity, share your thoughts in the comments. And if you believe this understanding can help someone in your colleague or friend circle, make sure you share it with them. This video is created for educational purposes only. For more clear, calm, and practical financial education, subscribe to Money Depth Insights. I am the Finance Guide, John Array, and I will see you in the next lesson.